Roger, it's great to see you. What's your personal expectation of what we're going to see?
I joined the market consensus. I expect 75 basis points. There was some good news that came in a little while ago on inflation expectations. And then there was a little conversation that took place publicly between one of the governors, Waller, and Raphael Bostic, where I think Bostic sort of laid it out cleverly that, trying to surprise the markets with something too large by definition is going to be destabilizing. So I'm with the 75 basis points group right now.
So 75 for now, but of course, the all-important press conference, and we're going to get some comments about all of this on Wednesday, which I think are probably going to set the market directionally one way or the other. What is your sense of what comes after this?
A couple of things. First, we have to see if there are any dissents, right? So does Waller or Bullard dissent in favor of 100 basis points? Does someone dissent the other way? And so I think that's the first question, whether we'll see tight consensus around this or a few outliers that may be the precursor to something new. Secondly, I think the story is, I think Chairman Powell is going to be a little careful about putting too many numbers out there, as that is proven in the past to not be totally accurate. However, I think very importantly, they do not want to signal at this stage that they think the job is done because they know it's not. So I think they want to keep an expectation in the market of 50 to 75 basis points for the next meeting, let the data come in, and then decide.
So, Roger, now we're really grappling with two extremes. One is the stop-and-go policies that got us into trouble back in the 70s that seemed like just being data-dependent. And we hear most of us probably think that's probably the way to go with the Fed. If it's biting, it seems like things are slowing and unemployment's rising, then maybe you're able to stop next year or cut. And then there's others that say that we've seen that the genie's out of the bottle and you need to make a plan and follow through on it regardless of whether circumstances seem to change. What's right for the Fed?
Look, I think what's right for the Fed is to try to be as nimble as they can, but very importantly, keep their eye on their primary target, which is inflation and inflation expectations. I consequently believe that they may be a little more hawkish than the market currently expects. I wouldn't be surprised to see them get the Fed funds rate up to something like a 4 handle as opposed to the 3.75 currently in the market. And it's for the reason that you just point out. I think there's a real risk of doing stop and go. They've learned from the 70s that is folly. And so I think they're going to lean a little more heavily on making sure inflation is under control and inflation expectations are under control and holding on to that hard-earned but fragile credibility that they need and have.